Good morning, folks. Let's have a look at some of the news headlines in economic news from Bloomberg.com. This is a paid channel, and your subscribing to this channel helps me to pay for these. So I'd appreciate it if you subscribe and give the video a thumbs up so that the algorithms know that you like it. So here's the first article. I'm going to go through a few articles and then quickly have a look at the charts, including natural gas. Stocks rally as NVIDIA earnings put focus on tech markets wrap. NASDAQ futures climb. We saw a big rally in the NASDAQ and a big rally in NVIDIA yesterday. I think somewhere around 7 or 8, and I think we're up to 10% now in pre-market since yesterday morning when the market started going up. And just a little bit about NVIDIA, and their earnings are coming out tomorrow, so we're going to see what the earnings look like. But there are projections that these earnings are going to be blowout, super duper, fantastic earnings, and we're just at all-time highs again today, where we were a few weeks ago at that all-time high. So I think we're going to get through there probably today and tomorrow. Then a couple of other articles here. Just quickly, SoftBank ARM files for biggest IPO of the year. With eye on AI, SoftBank Group Core's ARM Holdings Limited took a step forward to what's set to become the biggest initial public offering of the year. Bet that the once obscure designer of phone chips can flourish in the era of artificial intelligence computing. And this is all from Bloomberg. Morgan Stanley is one of the only big banks left off ARM's IPO. So I think that's going to put a little bit of a boost under chip stocks. And then we have to think of NVIDIA again and AMD. And this is going to be what's the biggest IPO of the year, looking to raise $8 to $10 billion, etc., etc. So whether that's a big news story or not, I don't really know. Yeah, SoftBank's ARM files for IPO, set to be the biggest of the year. Designer for phone and semiconductors looks to go big on AI chips. IPO will be the largest tech offering since Alibaba's in 2014. It's a long time ago, almost 10 years. With all these IPOs, you have to sort of play it by ear and see how things go, whether that is going to boost the NASDAQ and chip stocks and AI type plays in general or not. We don't know. NVIDIA is going to be a big one to look at. We'll have a look at the charts shortly. And then just when it comes to currencies, just this article, Bank of Japan's Ueda discusses markets with Kishida, head of Jackson Hole. So the Jackson Hole meeting is on Thursday night, I think Friday, depending on your time zone. And Ueda has had a meeting with their PM about currency rates. So that's going to be interesting to see if anything comes of that. But we're seeing that the yen pairs are already coming off by themselves. Whether they have intervened already or not, I don't know. The article says here Prime Minister Kishida and the Bank of Japan Governor Kazuo Ueda met on Tuesday. It's now, well, that's today. That was early this morning, my time, and during the night in the US, to discuss financial conditions amid continued yen weakness and a rise in bond yields ahead of a key gathering of central bankers in Jackson Hole later this week. The Jackson Hole gathering always affects the markets, and it's going to be interesting. We don't know what the tone is going to be, whether it's going to be hawkish or dovish, what central bankers are going to say, and particularly, of course, what Jerome Powell's got to say about the outlook going forward on things like inflation and jobs and the economy and interest rates going ahead. So it does say here, though, that Prime Minister Kishida asked various questions about the economic and financial situation, and the two didn't particularly discuss currency moves, the governor added. So we've got this yen situation with the yen approaching intervention levels, meetings with the Prime Minister in Japan and the Bank of Japan governor. We've got Jackson Hole coming up, and we've got NVIDIA earnings coming up tomorrow, and NVIDIA just touching all-time highs at the moment. How is this all going to affect the markets in terms of NASDAQ, in terms of tech stocks in general, particularly chip stocks? We've seen a big, huge rally in NVIDIA, but we've got to look at things like AMD. All of the tech stocks really going to be affected by this. Microsoft, AMD, Tesla, we saw a big rally in Tesla, and all of the stocks in that sort of part of the game. And there's one more article here. Tech storms back. So the markets got incredibly short on tech stocks and the NASDAQ, and chip stocks in general, a little bit iffy. Not too sure whether this is a bubble that's about to burst or whether it's going to continue. But in fact, this has been answered pretty well as we approach new all-time highs again on NVIDIA, and 8% jump yesterday, another couple of percent today. I think we're at 10%, just at the all-time highs. And the chip maker set to report its quarterly earnings on Wednesday. Treasury yields we saw earlier, highest since 27 on elevated rate fears and so on. But the interesting thing about the chip stocks is that we're probably going to see really good earnings. We've seen this before in some of the tech stocks this year. Fantastic earnings coming out. We've seen similar sorts of scenarios on Apple, on Tesla, on AMD and Microsoft. And we've seen the markets actually pull back quite dramatically after reporting really good earnings. And maybe we'll see the same in NVIDIA, but I think we're going to see a bit of a rally first. So that's all the news. Let's have a look at the charts. and I want to get through this. I don't want to waffle too much. So let's have a look at natural gas to start off with. Natural gas still holding at the 78.6% Fibonacci level. Have a look at my previous video on natural gas to get an overall idea of how I'm playing this. But we're still at the 78.6% Fib, just holding above it. There was our reversal point. We're long from 266, 75% position with a hedge at $2.43. That's my structure for this trade. And so far, apart from that brief dip down there into that buying zone, we've held above the 78.6% Fibonacci. I'm not going to go into details. You can have a look at the previous video, which will give you an inkling as to how I view natural gas and how I'm playing it. And I'll put the link at the end of this video. And whilst you're thinking about that, please, again, if you wouldn't mind giving this video a thumbs up and subscribing if you like this sort of thing. And then generally, I'm not going to talk about anything else here. I've got soybeans and sugar. Basically want to sell all of these into rallies. Natural gas, that's this middle one here. Bitcoin, I think we've got some more downside in Bitcoin, but WTI is the question in everyone's mind. This is the kind of thing I'm thinking on WTI. That's just to give you a summary. You can pause this video and have a look at it. I think we've got some more downside. I don't know where it's going to stop. We've got support at $73.50 and we've got support below 73 down to 70 and into the 60s. And I think we'll get one of these paths or something in between. Here's this downward trend line, and here are the two moving averages, which will offer initial support. The trend line, the 50 and the 200. If we can get down into that area, perhaps just poke through it, through that trend line. Don't trust trend lines these days as much as we could 10 or 20 years ago, because they often get broken by algorithmic trading and purposefully disrupting technical patterns that you see on your charts. So often trend lines break and then the market continues to resume in that direction. So always expect that to happen. We don't get this touch and go like we used to beautifully in the past. So perhaps a dip down to 73, 74, $73, just below that trend line, just below the 100, the 50 and the 200 period moving average, and then a move up. But we may stop at these moving averages and the trend line. Those are perfectly aligned together. We've got a confidence of those at about $75.5, $76. And failing that, we could get all the way down into these previous supports on WTI. Same applies to Brent crude. And then a couple of things here, gold. Now, what I like about these metals is that all of these metals charts are rallying. We're long on uranium. We're now at $23.20. We're long from 21.50, 21.5 on uranium. This is moving up beautifully. And I'm not going to zoom into these charts, but you can have a look at them yourselves. Just have a look at where I've kind of drawn these lines, fit them onto your own charts if you want to. But look at copper, look at silver, look at palladium, look at platinum, all rallying beautifully. Gold is the laggard. Gold has only rallied a very small amount from 1890 to 1900. But look at silver. We've gone from, 22.5, 22.20 really, up to 23.40. Copper has rallied beautifully off that support level, and all of these metals are leading the way. Look how copper's bounced beautifully off that level. I'm not trading copper, but several of my members are, and they're interested in this, so I do put these charts up from time to time. Copper's a classic technical play. I mean, you don't get better than that. This red area is the support line. It's also the rising trend line, a long-term trend line, and we formed a beautiful reversal. So all of these metals leading the way. Gold is the laggard, but if these continue to show bullishness and intent to move higher, I'm surprised by copper and silver actually being mainly industrial metals. Not surprised by uranium. I think uranium is one of the best plays this year. I'm expecting uranium to go to 25, 30, 35 and even higher. So we're beautifully positioned long in that one. But when it comes to, and it's because of building nuclear power plants all over the world and reactivating, firing up, that's not the correct word because there's no combustion involved. That's what's so good about these uranium powered power plants, is that they're zero emission. And I have a feeling that all the very small amounts, relatively speaking, of nuclear waste, which is turning out to be quite a safe process overall. I think Elon's going to shoot a lot of this stuff up into outer space with these reusable, returnable rockets. And we won't even have a nuclear waste burial problem in the near future. So, and there's a lot of plants coming online, new plants being built, and the main orders haven't even gone through yet for these plants. So as soon as those orders and contracts are signed, it's going to be, I think, an even bigger push on the price of uranium. I'm a little surprised with copper and silver being industrial metals. We haven't seen the industrial slowdown that I expect will eventually happen to the extent that it will happen. Perhaps that's being a little bit supportive. It's been a little bit buoyant, but we have definitely seen a slowdown in industrial output, not only in China, but also in the US and in Europe. And that doesn't seem to affect the price of copper and silver. So very surprising. Gold has been the laggard. I like the fact that all of the metals are rallied except for gold. That gives us an opportunity opportunity to get into gold at around about this price. We're currently hedged at the moment. I'm waiting to see how this day probably closes out. And then we've got Jackson Hole, which will affect basically the dollar and the stock markets. So we need the dollar to start coming off. We'll have a look at the dollar index, and it is doing so already, but not dramatically. Having a look at these stocks then. So I think overall we're going to see a bounce on NASDAQ, S&P, AMD. I've got a couple of paths now. I'm going to just draw this out the way I see it. Let's start with NVIDIA. So we've got NVIDIA earnings coming up tomorrow. So this is what I think we're going to see. We're at the all-time high. You can see in pre-market we're at 477. That's right at the previous all-time high going back to July. I think we're going to break above there. I think we're going to get up to the underside of this upward trend line, but I think we're going to get through there. I think the round number 500 is just too tempting. We're going to get up through 500. And I think we're going to go to 520. That's the projection for a lot of banks and Morgan Stanley and various others. Not always right, of course they're not, but this is kind of the area that people are looking at. I like 520 because it's a round number. And I like the 80s and the 20s in general on any chart. So this is my overall projection. I think that the earnings news is going to be really good probably. Everyone thinks it's going to be good, probably will be good, and I think that's going to push this market up. But then I think we're going to see it fall back down afterwards once we've broken through some of these key technical levels and got the market on the wrong side yet again. So we're starting to look for positioning short on NVIDIA at some stage. I think AMD's got a chance, being the sort of other second place by a long way chip stock. I think this is going to rally in sympathy with NVIDIA, but we've got some good resistance above us. So you've got the 50 period moving average and this downward trend line. And I think if we can get up there into somewhere into this region where I've drawn this round red circle, we could have an opportunity to sell AMD. Just looking at Apple and Tesla. Tesla's had a big rally. And in pre-market, we were up at this red resistance line. I don't know what's going to happen with Tesla and Apple and Microsoft and all of those others. I think it's anyone's guess, really. And they're going to be led by the market in general. But I think we've got some good plays on AMD and NVIDIA after tomorrow's earnings. So that's going to be super interesting. And we'll have a look at that. And then the yen pairs, well, we're short on these. And this has been a really difficult play. We've been in and out of these yen pairs. We've been hedged, unhedged, hedged, unhedged. And it's been going on for weeks and weeks and weeks now. These are slowly starting to come off quite nicely after forming a fractionally higher high on this last little rally and perhaps getting the market on the wrong side. Just breaking up through those highs. It certainly triggered some of my hedges, which I've now had to unhedge. Don't even ask me how many times I've hedged and unhedged these, but it's all a matter of trying to do the best to protect profits if possible. And we've tried to do that, or protect the downside. But every time you unhedge, you've got to take a small loss. So that's the way that's been going. But so far, those are coming off quite like that. And when it comes to the majors, well, I don't really have very much to say on the majors at the moment. A lot of all of these will depend on the dollar index. So we've got euro, pound, dollar, yen, which is coming off quite nicely, as you saw on the previous charts. And then Aussie. But this is the key chart, the dollar index. And we wanted to see this falling down at this key resistance. It's a 78.6% level, previous double top, and long-term support and resistance level. We've got up there now, and we wanted to see a decent reaction downwards. And so far, it's been very muted, very stilted. We've got a hanging man candle, three hanging man candles in a row, then a spike high, then another hanging man candle. And so far today, we're shaping up to get another hanging man. But I would like to see a little bit more aggression to the downside, a bit more oomph to show that this is moving down. And as soon as the dollar starts to move down, we should see stocks to move up. We should see gold move up, and generally the markets overall, commodities, natural gas, oil, everything will depend on the dollar. A lot of it depends on the dollar, and that's all been a little bit messy. But let's keep a very close eye on this, and I hope you've enjoyed that. And we've got a decent strategy, I think, on NASDAQ and chip stocks that we can play into over today and tomorrow and the next day as the NVIDIA earnings come out. And then we've got the Jackson Hole on Thursday, which is going to have a big influence. It does every single time, every year. We're all talking about rates, and it's the central bankers getting together, a wonderful little club, and talking about what's going on in the world of finance and how to direct the world through this very tumultuous period in whatever way they see fit, whether it's open and honest or nefarious, always very difficult to tell. I hope you've enjoyed this. Please give the video a thumbs up, as I said, and subscribe to this channel. It really helps. And I'll see you in the next video. Take care.